Good morning, hello and welcome to this Money Controls live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we are into the penultimate trading session and 25%, that's the new number US President Donald Trump has spelled out for the Indian imports ahead of the August 1st tariff deadline. So not just this, but also penalties are likely to be imposed on India because of its continued trade ties with Russia on military and energy fields as well. So while he has hinted at penalties, but nothing has been specified which form or quantum of these penalties would be. But if you look at the gift Nifty, it's reacting quite sharply on the back of his comments, so showing a sharp gap down start for the Indian markets, about 170 points downtick coming in from the gift Nifty itself. But given that US has been the largest trading partner for India for the last 4 years, and the fact that India imports about 35% of Russian crude as of latest data, both of these statements are expected to induce some fear in the markets. Remember, it's also the monthly expiry day, so volatility could be on the higher end. So yes, all in all, we could see a very subdued trade going into the trading session. But now, apart from all of this, we also have the US Federal Reserve, which is keeping the rates on hold on expected lines. This would largely be a non-event for the markets, but our own local news earnings is something that we would be keeping the markets on tenterhooks. We have had good earnings coming in from M&M and Tata Steel, and 6 more Nifty companies will be reporting their results today. So all in all, a heavy news, plenty of things that the markets would digest to. We have a special global guest also today who will take us through how these tariff developments would get digested by India. So we'll get to him in just a bit, and also don't forget to post your stock related queries and we'll take them up shortly throughout the segment. But before we delve deeper into the show, let's take a quick look at the top headlines this hour. The US announces 25% tariffs on imports from India and an unspecified penalty over India's purchases of Russian weapons and energy. The announcement comes as India is still negotiating to try to push for a trade deal ahead of August 1st deadline. India's Commerce Ministry says that they are committed to objective of fair, balanced and mutually beneficial bilateral trade agreement. Asian markets are mixed as US announces 15% tariffs on South Korea and 50% duties on copper imports. The gift Nifty is indicating a gap down start for our own markets. On expected lines, US Federal Reserve held interest rates with dissent from 2 of central bank officials who have been appointed by President Donald Trump, who agreed with the fact that the monetary policy is too tight. The Wall Street ended mixed in the overnight session. Crude oil prices inch higher as investors focus on developments on the US President Donald Trump's tighter deadline for Russia to end war in Ukraine and his tariff threats on countries who buy crude from Russia. Meanwhile, gold prices dip as Federal Reserve keeps interest rates unchanged. And in key earnings, M&M reported a largely in-line set of numbers for the June quarter, aided by revenue growth. Meanwhile, Tata Steel saw good June quarter performance as bottom line beats estimates. Another week of heavy earnings as 6 Nifty companies are set to announce Q1 results today, including the likes of HUL, Maruti Suzuki, Eicher, Sun Pharma and Coal India. All right, let's quickly get on to understand the 360 degree of what these 25% tariffs imposed on India means and the Fed holding on to its interest rates since December. We have a special global guest joining us, Seth Freeman, Senior Managing Director at GlassRatner Advisory, who is joining us right now. Seth, good morning. We're seeing 25% tariffs we're seeing 25% tariffs and penalty on India. How much is posturing by the US president as it has been the case so far, and what could be the real outcome?
Well, he's certainly been posturing from the very beginning about tariffs, the timing, the percentages or the amounts. But I think that the situation with India is quite serious. And the reason I say that is, and I have said this in the past in Indian media, it's been extremely problematic that Indian oil importers, and we know who we're talking about, have been buying a lot of cheap Russian oil. And this has been going on now for some time. And this is just politically and diplomatically a big problem. And on the same token, there is a trade deficit. It's the U.S. Uh, imports about twice as much. I think it's just under $80 billion or something from India than what India imports from the U.S.
Mm, okay, okay. Seth, Trump has also specified for penalties on India for buying Russian crude and weapons. What do you think? In what ways can these penalties be imposed by the US? Because nothing is fixed as what could happen.
Yeah, some kind of I don't know, something like a sanction,
Hmm.
or wouldn't be a tariff as he's calling it, a penalty.
Hmm.
He is now seems to be centered on coercing Russia to enter into some kind of a peace plan with Ukraine, and Russia's ability to continue financing its activities against Ukraine is certainly comes from its oil sales.
Hmm. Okay, okay. But out of the 80% of crude that India imports, 35% accounts from Russia itself. And now that the given penalties that the Trump has been hinting on, how do you expect that, it could disturb the inflation math for India and the economic projections if some of these Russian supplies could be reduced on the horizon?
Well, it's going to certainly be inflationary for India if that
Hmm.
lower cost oil is no longer, or rather, decreased um, coming into the country. It's going to raise costs. It's going to, because oil is used across so many different industries, it's going to, and there's a lot of core manufacturing for domestic purposes in India. It's going to potentially increase costs across a broad range of India's economy.
Hmm. Hmm. Okay. Seth, then how do you believe that India stands competitively among EM peers in this tariff game? Because right now China has about 30% tariffs, Vietnam is with about 15%, and today we saw South Korea with about 15% tariffs itself.
Mhm. Well, it's rough because emerging markets countries have been the primary, primarily exporters.
Hmm.
And the reality is that the US is the biggest importer, especially of consumer products, and a lot of industrial components and chemicals and other inputs. So, uh, these tariffs are going to have more impact on the U.S. importers and U.S. consumers and manufacturers, I think, than many EM countries. And the reason is that there really aren't immediately um, replaceable sources for the products that are being imported.
Hmm. Okay. Okay. Seth, what does this mean for the India's growth story also?
They
Are
have
you
one of the
revising
highest
any of the
tariffs in the
growth
world.
projections for at least
Now
your
they will.
FY26?
No, I don't think it's going to really be that
Hmm.
significant. 84 billion dollars is a lot of money, but the domestic growth story is going to continue. Look at what's happened in the Indian markets
Hmm.
over the last 10 or 15 years. Previously, very significant but short-term outbound money flows from foreign investors would just roll the market. And the market has become so much more stable with the growth of domestic Indian investment. And so I'm not concerned about the long term. And Trump is not going to be president forever, whether he would like to or not.
Hmm. That's true. But Seth, what would you suggest investors at this point of time? Are we showing a bit of a resilience? How would you suggest investors to navigate? Should they use the strategy of buy on dips at least for the next 3 months or so on the period?
I think if it depends if someone is a trader or
Hmm.
someone's an investor.
Yeah.
And Um, I've gotten pretty old, and I'm becoming to believe more in slow and steady, not to try to time the market so much unless you really have a lot of tools or a strong stomach. Uh, but I think the long term is solid. I think if there's some industries, some specific companies that are hit abruptly because of all of this noise, this might be a good time to you know buy low. But typically, uh, many traders and so-called investors are better doing or more commonly buying high and selling low. So I think consistency is probably the most important thing.
Consistency is the most important thing. Seth, I'll also touch upon the base of FI flows because so far they have been net sellers this month. Do you believe these tariff developments could accelerate outflows going from here on?
Um, I I don't I don't think so. Especially now that we know rates are going to be
Hmm.
stable um, for at least, stay the same at least through September. Um, we are also in the summertime, and a lot of traders are on holiday break around the world, particularly in New York. And so we have much lower volumes than during the normal year. So I really think we're going to have a lot better information on sentiment after the U.S. Labor Day holiday in early September.
Okay, okay. All right, just one last question before we let you go, Seth. You did mention about Fed holding rates till at least September. What is your projection for the rest of the year, 2025?
Well, prior to the announcement earlier today here and the press conference and so forth, the expectation from a lot of analysts was a 60% chance of a rate decrease in September. But after today, I'm reading that the consensus seems to be looking more at 50%. So I guess it could go either way based on today's thinking.
Okay, okay, all right. All right, with that, we have to let you go, Seth, but thank you so much for your time and joining us.
Thank you. Thank you.
All right, let's take a quick check of the markets because let's take a look at how the pre-open rates stack up right now. If you look at Sensex, it's showing a sharp fall with about 700 points downtake, and Nifty is also below that 24,700 odd level. So it's trading about with about 24,642 levels at this point of time. But if you look at yesterday's markets also didn't see a lot of enthusiasm despite ending in the green. It did struggle to cross above that 24,900 odd levels, and if you look at the broader end of the market, that also continued to underperform in yesterday's market. If you look at some of the sectoral indices barely, with a very slim set of gains that they saw yesterday. But yes, we did have the FOMC decision like we were talking about earlier with Seth, and there were two dissenting members who have been appointed by the Republican Party itself who did vouch for an interest rate cut of about 25 basis points. We have more global cues to track off with. We have the PCE inflation data which will be out today itself, so we'll be watching out for that. And also the earnings reaction will play out today. More numbers which will be on the horizon. Eicher Motors, Maruti, Pharma, all of them will be reporting their first quarter results in today's trading session as well. But on that note, let's quickly get on board with our next technical expert of the show. Joining me is Chandan Taparia, Senior Vice President, Head of Derivatives and Technical Research at Motilal Oswal. Chandan, good morning. We have had the 25% tariff announcement from US, and Nifty has been fairly range bound, but today it's showing a sharp fall below that 700 odd levels. How does the structure look like for the coming days?
Good morning. Thanks for having me. So market, which took support at 24,600, witnessed a recovery to 24,900, but it failed to hold at higher levels. However, on the last trading session, the market was range bound, but it failed to surpass 50 DMA. And now, as per the comment from US tariff, I believe the market is opening negative. So the structure which was getting some buying interest might take a pause in positive momentum. So we are expecting a spike in volatility index, and now 25,000 could act as a hurdle. And with that hurdle, index can again retest the key level of 24,600 to 24,442. So expecting profit booking decline in broader market, and both the indices Nifty and Bank Nifty may see some more decline in the liquidation of long position. I also believe that we have seen put writing at lower strike, and being the monthly expiry, unwinding pressure could also be there in the market.
Unwinding pressure could be there for the markets. It's a monthly expiry for Nifty as well. But let's also talk about some of the textile stocks in focus, given that the US has imposed about 25% tariffs. Chandan, how are you seeing the likes of Gokal Das, Arvind, Welspun Living, all of these, they have a higher revenue contribution from US. Any fear emerging? How does the chart patterns look like?
So like the pattern of most of these stocks are negative to range bound, and I believe because of such update, I think most of the stocks are likely to under pressure. I think we should not be in hurry. Let the market open and see what kind of reaction happens in the individual counter, and accordingly we need to take the stance. But yes, talking about Gokul Das, looking at the technical setup, I think the supports are there at the lower levels, but multiple supplies clearly visible. If I look at the Arvind Fashion and other name, I think most of the counters could be under pressure. Arvind, which has seen the strong rally in last week by 9 to 10%, might retest the support of 520 to 530 levels.
Okay, all right. Let's also talk about some of the shrimp stocks in focus, because they also have about 41% of shrimp exports did go to US in FY24. How does the stocks like Apex Foods or even Avanti Feeds, how do they look like on the charts at this point of time, Chandan?
So like chart setup is mixed, but today's event is an important the concept for the market. Avanti Feed has seen a decline by around 5% in this week, given a breakdown. So I believe weakness could be there. Stock can go down towards 650 levels.
Okay. Let's also talk about Nifty Pharma Index, because that index has been doing quite well in the past couple of sessions. But there is some tariff news on the horizon. But however, pharma sector has been excluded from any of the list of the 25% imposition of tariffs. But any impact which is likely in the upcoming sessions, how does the structure look like, Chandan?
So pharma is the mixed set of cues. I think selective car motor like Biocon, Loras could be on radar in the pharma pick.
Okay, all right. Pharma stocks, that was what we need to watch out for. Dr. Reddy's and all of that, we need to watch out for in today's trading session. Just a couple of minutes, but yes, we have opened with about 100 points downtick for the Nifty 50, below that 24,700 odd levels. Like we were expecting that, we would be having a gap down start for the markets. And yes, we have opened with a, sharp fall of about nearly 1% or so. If you look at Sensex, that is also opened with about 500 points downtick, 0.7% decline coming in for the Sensex too. And if you look at the broader end of the markets, the mid caps definitely sulking in the trade with about 1% decline. Bank Nifty also with about 0.4% cut. So all in all, it's a very subdued sense of a market. If you look at the advanced decline, it's still, declines have taken an upper hand at this point of time. The breadth of the markets definitely seems to be bearish. If you look at the India Wix, that is showing a bit of a volatility spike, 4% uptick coming in for the India Wix itself. Coming to some of the sectoral indices, Nifty Auto Index seeing a cut of about 1%, Nifty IT Index with about 0.6% decline, Nifty Pharma Index right now unchanged at this point. But however, if you look at some of the other sectoral indices, Nifty Bank also has opened with about 0.4% decline at this point of time. Nifty Metals also with about 0.8% decline. Remember that US President has also imposed about 50% of tariffs on any of the copper imports. So we could watch out for some of the copper stocks in today's trading session as well. But let's take a look at some of the top gainers and losers on the Nifty 50. Just two gainers at this point, SBI Life and Geo Financial doing well with about 0.8% gains. However, on the other hand, if you look at the way down, Tata Motors extending its downfall to the second consecutive day with about 2% fall. Reliance not doing well, in one of the index heavyweights, dragging the overall markets down as well with about 1% decline. Titan, Dr. Reddy seeing a bit of an impact, 1.4% decline coming in for there too. Shriram Finance and other like Hero MotoCorp also seem to be not doing well in today's trading session. But yes, let's talk about M&M, because that stock was in focus yesterday on the back of its June quarter performance. Let's take a look at how that stock is doing. 1% decline coming in for M&M too. We did see that the net profit rose about 24% on a Y-on-Y basis, and revenue also soared by about 24%. 23% on a Y-on-Y basis. If you look at how the brokerages have reacted, well, brokerages have fairly remained bullish on the counter. Jefferies has given out a buy call on the counter because the company has delivered a 13th consecutive quarter of double-digit EBITDA growth. So yes, and the tractor demand has also improved, and they believe that it is one of their preferred buys. But the stock has been quite range bound. Today, the stock is down about 1%, and it has been consolidating in the range of that 32 to 3100 odd levels. Chandan, now what is the structure looking like? What is the next levels that we can watch out for M&M?
So I think we need to look at the key support zone in the market. The good part is that the overall trend is range bound. However, we have seen some profit booking decline in last 5-6 trading session, but stock is holding well to its rising support trend. And however, it is down by around more than 1%, but I believe 3100 could act as a major support. So with the support of 3100, the stock can again bounce towards 3250 to 3300 levels.
3,300 levels. Let's also talk about Tata Steel. The stock is marginally down in today's trade. We did see that the Q1 profit more than doubled to about 2,000 crore rupees, and revenue, however, that fell about 3% on a Y-on-Y basis. This was given that there is lower losses which were seen in its UK business itself, and the stock has been an underperformer so far this year. Brokerages, however, they have fairly remained bullish. If you look at the Morgan Stanley, they've given out an underweight rating on the counter, given that the company saw support from lower raw material costs and reduced coke purchases as well. But the stock has been an underperformer. Today, it's showing a little bit of a slim gains in this subdued market. Chandan, what is the next level that we can watch out for? Can we see finally a good momentum, because the stock is still flat with a positive bias?
So Tata Steel is holding the support zone. In fact, the positive to range bound bias is clearly visible. If I look at the price behavior of last 25 days, 3 times it took support at 157, 158 zone. And even after the negative sentiment from the global market, this counter is holding, which clearly indicates the resilience and strength in the counter. So I believe with support of 158, one can look for a buying opportunity, and it can head towards 166 to 169 levels.
169 levels that we can watch out for. Let's also talk about Indigo Globe Aviation, because it came out with its results yesterday, and the results were not that quite good, because if we saw that the net profit levels dropped about 20% on a Y-on-Y basis, and revenue rose about by 5% on a Y-on-Y. The stock has been in an upward trajectory, but has entered a zone of a consolidation. What are you seeing? Are there any signs of oversold zone, Chandan, for Interglobe Aviation?
Yeah, so like if I look at the Indigo, the stock has seen a corrective move, but the declines are being bought. One of the strongest counter in last couple of years, making higher tops, higher bottom on the bigger time frame. However, in this month is down by around 4%, but major trend is positive, and I believe any decline could be bought. So with support of 55, it can again see an up move towards 6,000 marks.
Okay. But yes, let's once again talk about textile stocks, because they have been on a sliding trend under pressure today. Gokaldas Exports seeing a cut of about 7% or so. Arvind is also down by about 3%. And given that, we have had trade deals, we have had 25% imposition of tariffs. Vietnam, on the other hand, has been given out 15% tariffs, and Bangladesh had 30% at this point. So yes, we are, treading with caution at this point. But yes, we have one query on this. Naveen has been asking the view on KPR Mills. The stock is down today. But yes, so far this year also, the stock has not been doing quite well. Chandan, what are the next levels that we can watch out for KPR Mills?
So like for KPR Mill, it witnessed a corrective move in last 5-6 trading session, corrected from 1250 to 1115 levels. Multiple supports are visible at 1095. So I think on decline, one can buy with support of 1095 for a bounce towards 1200.
Okay. Let's also talk about Naveen Fluorine, because that came out with its Q1 results yesterday, and brokerages have been quite optimistic on the counter. If you look at some of the brokerages, what they have given out, Jefferies has given out a buy call on the counter. They've raised the target price to about 6,025 rupees per share, given that there is a strong print in EBITDA and PAT, and the earnings was driven out by a strong performance, and they see about 36% EPS CAGR over FY25 to 27 itself. Today also the stock has been doing quite well with about 2% uptick at this point of time. Chandan, can we expect the positive momentum to continue?
Yeah, expect positive momentum in most of the chemical name, and Naveen Fluoro looks quite strong. I think one can buy with support of 5200 and expecting this counter to rally towards 5500.
5,500. That is what we are watching out for Naveen Fluorine. Let's take another viewer query on that note. Rupak Mehta is asking the view on Zen Technologies. He's asking whether it is a good time to enter now after the drop. That's what he's asking. Today, the stock has witnessed a downfall of about 3%. And in the past 6 months, the stock has been down about 15% itself. Chandan, what would you advise? A good time to buy?
No, so better to avoid the stock continuously hitting to the lower circuit. In last 8 days, it has seen a corrective move from 1900 to 1450. So structure is weak and liquidity is comparatively lesser. So my suggestion is try to exit. As of now, the way it is falling, it would be tough to say whether it takes support near 1300 or 1250 levels. So my suggestion is try to avoid or exit if you get any chance on recovery.
Okay, try to avoid on any chance. Let's take another viewer query on that note. Mayank has been asking the view on IEX. How does the near-term prospects look like? IEX, Chandan, of course, after the market coupling order that we saw, it's seen a good 20% fall. What is the next that we can watch out for?
So, like IX has been quite volatile in last few trading session. In fact, in last 3 weeks, it has seen a corrective move from 210 to 131 levels. However, from last 4 days, it has been consolidating with multiple support at 132. So, till that level is respected, some recovery could be seen, but we need to keep in mind that major trend is negative and we have seen built up of short position. So, as of now, 132 to 145 is the broader trading range one needs to play.
Okay, broader trading range we needs to play. Let's take another viewer query. Then Shatish has been asking the view on Tata Power. How does the stock look like? Because the stock has been fairly stuck in a range, 390 to 400 odd levels. What would you expect, Chandan, near term?
So looking at Tata Power, I think selective power counter has seen some buying interest and Tata Power has been consolidating with multiple support near 393. So with support of 393, one can look for positive to range bound bias. Upside it can head towards 410.
Okay, all right. Let's take another viewer query then. Debuk has been asking the view on BPCL and HPCL. Both of these counters are on a sliding pressure given that some penalties on buying of crude could be possible. That's what the US president has hinted, and both of them are seeing a selling pressure for about 3% downtick coming in. But on the charts, what do you expect, Chandan, for both of these counters?
So like looking at BPCL, I think the crude volatility could keep the counter in shaky mode. As of now, the stock has been making lower top, lower bottom. So hurdles are visible at 335. It can go down to test the major support of 310.
Okay, all right. Let's take another viewer query then. On that note, Bharat is asking the view on GE Vernova for a fresh entry. Well, yesterday the stock did see an 5% upper circuit on the back of its strong Q1 results, and it did hit a record. And today also the stock is up about 5% upper circuit itself. For a fresh entry levels, what would you advise, Chandan, for GE Vernova?
So I think just wait for more the clear picture. As of now, the structure is not clear. I think some more stability is required in the counter.
Some more stability is required in the counter. Of course, the stock has been on a good uptrend after its June quarter results. Let's take a look at another viewer query then. Sri Raksha has been asking the view on Adani Power on how does the near-term charts look like for the counter. Of course, we can see that the stock has once again entered the consolidation zone, 580 to 600 odd levels. That is where we are at. But from a 6 months perspective, it's a structural uptrend for the counter. Chandan, what can we expect the next target to be for Adani Power?
So like Adani Power is negative to range bound, but now it is taking support at lower levels. We have seen good recovery in last 3-4 months, but now got stuck in a range. But the good part is multiple supports are visible at 560. So buy on decline can be applied with support of 560 for a positional target towards 620 marks.
Okay, 620 mark for Adani Power. That's what we need to watch out for. But let's take another viewer query. Satish Gunter has been asking the view on Titan. Past 1 month, the stock has been struggling with about 9% decline. And today also the stock seems to be not doing well with about a percent decline itself. Chandan, how do you look at Titan at this point?
So I think Titan has seen a profit booking decline in last 1 month. It has seen a corrective move of around 10%, but now the multiple supports are visible. So let it see some stability near 3250 and near to those zone one can go for some bargain buying. So immediate structure is negative, but I believe after some more decline buying interest could emerge. So by keeping the support of 3200, utilize any decline to buy for an upside target towards 3500 in Titan.
Okay, all right. 3,500, that's the resistance levels that we need to watch out for Titan. Let's take another viewer query. Meha Bata is asking the view on Power Mech projects. The stock has seen a good uptrend for so far this year, 16% up, but right now in the past 1 month, the stock has declined about 6% or so. What can we expect? How does the near-term momentum look like, Chandan, for the counter?
So yes, I believe some more recovery could be there. As of now, the support-based buying is visible in the counter, so one can see further up move. 5 to 7% kind of swing can be there in this stock.
Okay, all right, that's the view coming in. Let's take another viewer query then. Anunya Ricky is asking the view on Taj GVK Hotels and how does the counter look like? Today the stock is showing a negative momentum with about a 0.8% decline, and past 1 month also the stock has not done quite relatively well. But so far this year the stock has also declined with about 6% decline. So yes, Chandan, not a negative, quite a negative trend coming in for the counter. What can we expect for the near term? Can the pressure stay imminent?
So like Taj GVK has been consolidating. The good part is after the recent corrective move, some support-based buying is visible at 400 level. So I believe now with support of 400, one can look for a bounce towards 430 kind of levels.
Okay, 430 kind of levels that we can watch out for. Let's take another viewer query then. We have Anunya Ricky is asking whether or not the Hindustan Aeronautics can be bought at the current market price. Of course, the stock has declined with about, in the past 1 month itself. It has entered a consolidation zone. But is it a good buy at this point of time, Chandan? What would you suggest?
I suggest to wait for some more time because the structure is turned negative. It has been making lower top, lower bottom. However, 2 days back it took support near 4400, but it's tough to surpass beyond 4650 kind of level. If it moves above 4650, then only the stability will be back in the counter.
Okay, all right. Let's take another viewer query then. Project Prakash is asking the view on Car Trade Tech. He's bought the stock at about 16-12 rupees and the stock is doing well from his buying price 21-23. That is where the stock has been trading. Today also seeing a good up move on the back of its June quarter results itself. Profit has more than doubled and that's why we are seeing a good buying interest in the counter. Chandan, what can he watch out for? What would you suggest at this point of time for him?
Yeah, trend of the counter is positive and we have seen sustained buying interest in the stock. So one can continue to hold the long position. As of now, with support of 2050, car trade has potential to lead to us 2200 levels.
Okay, all right. All right, let's take one particular stock in focus, that is your ITD cementation. The company saw a highest ever quarterly profit at about 137 crore rupees in the first quarter, and revenue also rose about by 7% on a Y&Y basis. EBITDA performance was also stood well with about 5% on a Y&Y basis. Today also the stock seems to be doing well with about 2% uptick, and yesterday also the stock did quite well. And it has been an outperformer this year itself. Chandan, what is the next target that we can watch out for ITD cementation?
So like looking at ITD cementations, I believe a positive move could be there. So one can still see the momentum, can use the rising support trend line for follow-up activities. As of now, looking at the price structure, expecting the counter to head towards 850 kind of levels.
850 kind of levels for ITD cementation. All right, let's take another viewer query on that note. We have Vipul, who has been asking the view on Astral. Well, the stock has been an underperformer so far this year. What can we expect? Can the pressure continue?
Yeah, I believe some more decline could be there in the counter. So as of now, avoid. Looking at the price structure, I believe the negative price pattern is being formed. It has seen negative price pattern. As of now, for any kind of short position, one can keep the stop loss near 1440. It can go down towards 1375 to 1350 levels.
1375 to 1350 levels, the pressure could be, present in Astral. Let's take another viewer query then. Payal Kalra is asking the view on Happiest Minds, and she's asking whether it should be held or sold at the current levels. Past 1 month has been quite negative for the counter, and so far this year also the stock has been an underperformer. But yes, from a near-term perspective, what would you suggest, Chandan?
So this stock is not performing from last 4 years. It really rallied well in the year of 2021, but after that the momentum has totally fizzled out. So as of now, the attraction is missing. Better to avoid. I think till it remains below 650, the momentum will be missing in the counter. So my suggestion is try to shift to the other IT name.
Okay, all right. All right, just one last question before we let you go, Chandan. We are seeing a subdued sentiment in the markets given the tariff imposition. Anything that you're finding interesting in the market to buy in this dip?
So, one can look at the Geo Finance, one of the strongest counter. Major trend is positive. It has seen a support base buying near 306, which earlier used to act as a hurdle. So, I believe now with higher base of 320, one can look for an upside target towards 345 in the Geo Finance. So, one of the strongest name one can look for immediate basis. Apart from that, one more counter which looks good from selective financials name and all. So I'll look at the Eternal from e-commerce name. So Eternal looks strong. We are witnessing a price pattern similar to pole and flag pattern, which indicates up move in the counter. So with support of 300, one can look for an upside target towards 322. So Geofinance, Eternal, these are the couple of names which could be in focus and likely to attract buying interest to generate the alpha in this market scenario.
Okay, all right. These are the two stocks that we need to watch out for. But with that, we have to let you go, Chandan. And thank you so much for your time and joining us.
Thank you.
Right, let's take a quick check of the markets before we move on to our next guest of the show. Well, Sensex has trimmed some of its losses from earlier in the day. Sensex is now down about 470 points, and Nifty is also below that 24,750 odd levels. We are back above that 24,700 odd levels, but still we're trading up with a cut of about 100 points itself on the headline index. If you look at some of the sectoral indices, all of them, majority of them have slipped into the negative territory. The larger cut is coming in from the Nifty Pharma index and the Nifty Metal index with about 0.4% and a percent decline itself. Nifty Auto Index also seeing a cut of about 1% or so, and Nifty Energy also seeing a cut of about 1% at this point of time. India Wix has spiked up by 6%. So yes, the volatility is on the higher end on the day of the monthly expiry for Nifty. And if you look at the mid cap and small cap indices, both of them have been underperforming. Mid caps definitely with a sharper cut of about 0.7% itself. But with that, let's quickly move on to our next guest of the show. We have a special market voice joining us. Joining us is market expert Ajay Bagga. Ajay sir, good morning. You know, this entire tariff news that the US president has come out feels like a negotiation tactic before the US officials visit in mid-August. To protect its even agriculture and dairy markets. But for the equity markets, how do you sense this news to get digested?
It will be digested very fast. To put it in perspective, yes, it is 18% of our exports. The US goods exports is about 2% of our GDP, but that entire 2% is not going to go away tomorrow. So this will be negotiated in. Second, you have to look at the size of the market, size of our economy. On a $4.2 trillion economy, you have a risk of about $3 to $4 billion. So it is like a 0.1%, 0.01% kind of impact that we foresee at the worst case. The risk is, of course, on Russian oil. If he puts a 100% tariff, then you have no trade with the US. But again, that will be difficult because he can't single out India and not do it to China. And obviously, they are not able to do it to China. And also, if the Russian oil goes out of the market, say 9 million barrels a day goes out of 103, there is no compensatory production available. The Saudis have about 2 million barrels of excess capacity which they can bring in. But more than that, there is nobody else. So that inflation genie that will come out will hit Trump the hardest. Because even US oil prices will then shoot up in case this Russian oil is taken out of the market. So not easy. It is a difficult situation. Markets are in the mode of sell out and sit on the sidelines. That's the institutional money. The retailers keep on buying. We have seen domestics buy about 4 lakh crores already this year, year to date, and that will continue. So again, it's a market where you have to go back to the domestic stories, avoid the sectors that are exposed to the US, like textiles, like gems, jewelry, leather exporters, chemical exporters, engineering good exporting companies, seafood importing companies. All those start getting hit. The relief is that pharma for now is not under this. So pharma has a carve out, and that's why our pharma has been doing well over the last few weeks. So, but more the domestic stocks is what will catch the fancy of investors.
Okay. Ajay sir, how do you see the entire FII flow picture to pan out? Because so far this month they have been net sellers, and we don't have any encouraging signs from India Inc. in terms of earnings itself. And now with these 25% tariffs, do you believe that the outflows could accelerate from here on?
Some on the margin, yes, some could accelerate. The rupee will fall, and if you watch, last 3 days RBI has let the rupee come down. So there has not been the usual protection of the rupee that happens. All of us know that in the last week of the month there are oil payments that go out, bunched up payments go out. Normally, RBI keeps the market well funded with dollars. But we have seen that there has been a calibrated move to keep getting the rupee down. So one way of countering the tariffs is to allow an orderly depreciation of the rupee, what China did in 2019. I think that will happen going ahead 5-6% as against the normal 3% depreciation that we see. FIs coming back to India, they are very much here. So there is $850-900 billion of FI holdings in our markets. Yes, it has reduced over the last 2 years because domestics have stepped in and bought. But it is a bipolar market. If you look at the secondary market, FIs are selling, but in the primary market, and in the QIP market, we have seen FIs participating. So even a 25,000 crore QIP saw a 4x kind of oversubscription. And primary IPOs, you see, good companies are getting massive oversubscription, including FIs coming in and participating. So it is a bipolar market to that extent. Two good things are happening, which are silently creeping up in this market. One, now you've spent 10 months below the all-time highs of September 2024. 10 months are gone. On a median, normally in 8 to 10 months, the markets bottom out and start reversing, and the old all-time highs are met again. Maybe this time it's one of those extended pauses. Maybe it will take us another couple of months, 3 months, but that's coming. The second big thing is Indian relative underperformance against other emerging markets. It normally bottoms out at 23-24% of underperformance. This cycle from September till date, we have underperformed by 21%. I think with today's cut, we are getting very near to that bottom. And normally from that level, there is a very sharp upswing in the Indian market because the valuations start becoming quite attractive. The third big thing is MSCI index. If you look at last 5 years, 1 year forward has been about 22. After today's fall, we'll probably be nearer to 21 times price earning 1 year forward. We have reached the average of last 5 years. So on the valuation also, I think comfort will come in. And then as you get the benefit of last year, what happened last year, March to September, there was very little government expenditure. And that really cascaded into the broader economy. From December onwards, earnings started picking up. So next quarter, this July to September quarter, you are sitting in a sweet spot where year on year, earnings will look much better because it was a very weak quarter. And now it starts ratcheting up. So I'm bullish overall. And I would say select sectors, especially the domestic focused sectors, they should outperform. Exporters have a clout because of this tariff and second order effects of Chinese goods coming and flooding all our customers as well as our own markets. So that China overcapacity, which the US would absorb or Europe would absorb, is going to hurt all exporters around the world. So there is a deflationary spiral in the exporters. But today's muted reaction under 1% cut in the markets, it just shows markets are more or less become resilient to these tariffs. There is no euphoria as we saw in Japanese markets, as we saw in Europe. Actually, Monday, after the European deal was done on Sunday evening, 1% up on the futures across the Asian trading. But when the European markets closed, they actually closed down. So that euphoria is lacking. and there is resilience to bad news. Plus, the example of Korea today, which was at 25, has come at 15 today. Japan has already done that. Europe has moved from 30 to 15. Brazil, which had 50% put on it, has been given a 7-day window. Plus, a lot of Brazilian goods have been exempted. We are expecting that also to be exempted. So, this is an outlier maximalist negotiation tactic that Trump has thrown. It has put the Indian policymakers into a bit of a spot of bother, but markets are seeing through to the actions. The bad news is we have just one day to negotiate, it won't happen. So these 25% are coming. Unlike Korea, got a month because it was announced on July 8th.
Okay, plenty of posturing by the US president itself. But Ajay sir, what are you estimating what the real outcome could be? Because everyone is stating that by the mid-August the trade negotiations are on, so it could be below that 25% mark. So what is your quantum of estimation?
15%. I would say earlier we were thinking 10% like the UK, but this outlier has brought it to 15%. I think we'll get 15%.
Okay, 15% is what you're going with. But amid all of this uncertainty, how do you suggest investors or traders to go on with the market strategy for about 3 months itself? How should they navigate this period of uncertainty at this point of time?
Traders take a holiday. I think investors doesn't matter, and investors are going on investing. But for traders, it's very difficult. So don't blame yourself in such kind of markets. You'll be cut both ways. There'll be a short squeeze also, which will happen. Like we saw on Monday, markets were so oversold. The put call ratios were showing that this is overdone no matter how bad the news is or uncertainty is, and we saw 2 days of markets picking up. Then this news comes through. So news flows are really driving markets in the short term, as they always do, but the impact has become very huge. So traders need to be very careful. Again, stick to the domestic sectors that should do well. Investors are not bothered. The India story is a 20, 30-year story, and you should invest based on that long-term perspective. We will come out of this. Won't be an issue for us at all.
Okay. Ajay sir, one last question. Any sectors that you're liking or disliking in this current market?
I think infrastructure is picking up. Power, anything to do with power is doing pretty well. We've seen the transmission companies really hitting all-time highs consistently. So power, infrastructure, banking, again, the NIMs have gone down, provisions have risen. So we got some amount of disappointment on banking and major NBFCs. But these are very well-run companies. And we are at the point where historically, the GPAs, NPAs are low, and there is enough demand in the economy. RBI has really put in a lot of stimulus. Out of that 100 basis points, hardly 60, 65 basis points has still come into the Indian market. So still a lot of transmission has to happen. I would say what is needed is a fiscal stimulus, cutting down GST. A massive dose of deregulation needs to come in so that we build the Indian domestic market even more stronger. Because even if we succeed, today we got 0% also. Moment we start becoming big, any importing country will start hitting at us. So the real secret ingredient is to be self-reliant and to build up your own capacity to consume and not just be an exporting company. Those worked in the 50s, 60s, 70s for the Asian tigers, but it's not going to work in today's milieu where Trump has made the entire world very protectionist. So success will have its own seeds of failure on the export side. The better thing for the government to do will be to build the domestic consumption basket. For that, you have to do tax cuts. You have to deregulate like anything. You have to make it easier for startups to take place and for startups to be shut down also, so that your labor codes don't mean that people are afraid to hire people. All those things. So labor reforms, land reforms need to come in very fast now. this is a wake-up call from Trump that whenever you're given the gun to someone else, they will use it for their national interest. So we also need to do this.
All right. Yes, domestic focus sectors, that's where we need to focus on. But yes, with that, we have to let you go, Ajay sir. Thank you so much for your time and joining us.
Thank you for calling me. Always a pleasure. Thank you.
All right, let's take a quick check of the markets at this point of time. We were off the day's low. And let's take a look at how Sensex and Nifty have been behaving, because the volatility has been on the higher end given that it is the monthly expiry today as well. If you look at the Nifty levels, it's still above that 24,700 odd levels, but still seeing a quite sharp downtick with about 5,150 points itself. If you look at Sensex also not doing well at this point of time. Sensex also seeing a cut of about 400 points coming in for there too. But yes, all in all of the sectors have been trading with a negative terrain. India VIX is on the elevated levels. And yes, all in all, we are, not off for a good start for the markets, given that the 25% tariffs, that is the big headline that is coming in for the Indian markets, and traders and investors have been digesting this news slowly and steadily itself. But yes, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off, do stay tuned to moneycontrol.com.